The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We have the Dow Industrials right now down 171. You get the NASDAQ off 45. S&Ps are down 23. And that first leg down, folks, you get some action down here, no doubt. Now, if we go over and we take a look at, well, let's go NQU. We can look at both the NQs and the E-minis. And what they're doing is this, is that what they're put this on a 3-day first so you can see how this shakes out. We had the high volume swing low that was generated out here Thursday. And that's where the market had come all the way back. That high volume swing low in the Qs is down at 42.26, which is a long way down, by the way. We hit 42.70 thus far on this first leg down. If we bring this back now and we take a look at this, what you're going to see is that we're at 42.80 right now. Bottom line, though, is you have a high volume swing once again. So that is building cause to get into that area. We go over to the E-minis. We take a look at the E-minis. Same type of setup there. What we have inside the E-minis is this, is that we've hit 1959. The low that was established that it's going after is 1944, which is, which is a big way down. That's the bottom line. So in that aspect, we go back. We take a look at how we hit this baby, same type of setup. We've done the first leg down had 70,000 contracts. The second leg has 58,000 contracts, and we're talking about 58,000, and you're starting a new bar right now. So bottom line is that you even going into the low that was established at, let's see, you kind of, I don't want to take after the market close because that doesn't make any sense. Yeah, see, first this will build cause first to get down to 1959. You break 1959, and what you're going to see is it's going to be wide open to get into those lower areas. Gold, we take a look at the gold contract. I really like how this baby's setting up, folks. Okay, so check this out. The gold contract, we've done 55,000 contracts thus far. That 55,000 is coming into the lows that were established on the 26th, where we had 207,000. That is really sweet. And it's done two different things. It hasn't got to the swing low, which is 1116. We'll only get to 1125. That's building cause right there to get up into the high volume swing point of 1169.80. What's so cool about gold right now is this. So inside the art of time in the trade, you're always looking at both sides of the market, meaning how does it hit the highs versus how does it hit the lows. Bottom line, what we have here with gold is that you have the wide price spread, accelerated volume as you start moving higher. We come back down, and as we come back down, first couple days had some real juice behind it. There's no two ways about it. Now what we've done, Friday, you pushed higher, 152,000, not bad, but today is the number that is saying, okay, no sellers, you're down 590, you get 55,000 contracts, that's not even close, okay? Bottom line, that wants higher price. Now, silver, we got to look at, because the silver market, folks, is the baby that is not only dangerous. Bottom line, though, is that she's building cause right now and also operating correctly as to getting up into a different trading range. Silver, however, is still in a lower trading range. We're at 1443. Silver has to, well, okay, it's over the trading range by a penny. That's the bottom line. So you want to see more than a penny. But 1442 is the larger range. I also like what silver's doing today. Silver has 14,000 contracts. You're coming against 58,000. So that's building cause to, try to get up into this 1577 once again. Bonds are the number, man. This is like really wild what's going on with bonds. And it just continues, folks, okay? The bond markets get a little bit trickier. There's no meaning that, okay, does it want to give it up? Or, in fact, is it going for higher price? Right now, this still wants to go for higher price. The way the 10-year is, we're on the Z contract right now. Now, what it's done is this. First off, it didn't get to a swing low. The swing low on the 10-year is 126.16. We hit 126.24, rejected that level, start going topside once again. Bottom line, it has some juice. So 10-year wants to go after this 129.10. And if we get juice up at that 129.10, that very well could be an ABC structure on the way up, which, you know, big number. So inside the Dow Industrial, strength versus the weakness, this is what you have. Oh, this is impressive. So the Dow, every stock is in the negative right now, which, you know, with every stock being in a negative, being down $1.64 is not that bad. The leader on the way down is Chevron. Chevron's down $2.04. You get United Technologies down $2.36. United Technologies is a mess, folks, big time. Merck is down $1.24, and you get GE down $48. The leader, even though it's in the red, is that you got GE is down 8 cents. Intel is off 7. You got Walmart down 31, and Johnson & Johnson is off 51. Inside the NDX 100, the leaders versus the laggards, what we have is this. The leader right now is American Airlines. That's up 67 cents. Staples is up 21. Staples ready to go out of business. Green Mountain is up 41, and you got Mylan Pharmaceutical up 25. Taken away from it, on the way down, you got Wynn Resorts down 245. That's a mess also. JD.com, that just continues into lower price. NXPI is down 212, and you get Celgene off 297. Let's go take a look at the IBB, because the IBB bottom line is what the NASDAQ's all about. So the IBB out here is off its high of 400 at 347. It failed on price and volume. Well, actually didn't fail on price and volume on Friday. It closed over the highs of Thursday, so that was cool. Bottom line, it has a failure out here today. It got to a higher high, giving it up at this particular point. We'll see where we trade out. If we go take a look at the SPYs and the NDX 100, they both did fail on price and volume on Friday. Bottom line is that you take a look at this, is that the SPY, first off, got to a price point of 199.83. You did 160 million shares, got over the high, closed underneath it, had lighter volume. Now, what you'd be looking for today, if you're a bull, you're looking for lighter volume on this pullback. You're a bear, you're looking for heavier volume on the pullback. Thus far, 30 times 6 is $1.80. Thus far, it's going to be a heavier volume. You know, we're not even an hour into it yet. We got 28 million shares. We take a look at the the Qs, the 3 Qs. What you have with the 3 Qs is the 3 Qs got to a price point on Friday of 106. You got over the highs, closed underneath them, had 49 million shares, 7, 6 is a 42. It's going to be close for the 3 Qs. The 3 Qs could have lighter volume out here today. The IWM, what do we have inside the IWM? What we have with the IWM is this. Small caps. Small caps had got over the high. Right now, the small caps look like they're going to fail the 115.12 area. So there's a little divergence out here. What the divergence would be that the small caps and the IBB look like they're probably going to catch up with the failure that was inside the SPYs and inside the Qs. Some of the high volume stocks in this market right now, this is what you have happening. You have Apple down 91. We have Sun Edison, that's up 11. That thing has got killed. Alcoa is down 14 cents. You get Netflix off 324. Micron is down 38. Some of the Dow stocks, what do we have? Dow stocks out here. You have Caterpillar down 44. Exxon's off $1.15. Oxy's down 150. Big Mac's off 66. Merck's down 127. A lot of red out here. Walmart is down 21. We got, let's go over to Walmart for a second, because Walmart is one of those equities that gave us a big heads up as to what is going on as soon as it broke that 70.25 area. The thing that's amazing, actually, with Walmart is that once it broke the 70.25 area, man, we're at 64 like in a heartbeat. And what it has is that it has a high volume swing low at the 61.50 area. Now, what we are going to have this week, which is pretty intense. You're starting off with a down day. If we get an expansion of volume as we come down, and you start with, this is a Labor Day weekend. So you have Monday, normally this Monday should be light volume. So if you get heavier volume, that's a big heads up in itself. Tuesday, Wednesday, Thursday, the market has a chance to move up, down, period. Friday, guess what? There's going to be a slow market coming into Labor Day weekend. It's the last weekend that people can go away, all of the above. But if we stay lower today, which I expect we're going to, and we do get an expansion of volume, and we really won't know that for another hour, hour and a half. If you get both, your probability goes higher that the next couple days you're going to cascade down, and then that's really going to be a problem coming into a 3-day weekend. Okay, so this is a big heads up where we are in this marketplace right now. We take a look at the fear out here. And right now, this is kind of intriguing, okay? The ARMS is going up to 1.9. So there's a little fear in this marketplace right now, which, by the way, would give the bulls a little chance, okay? Because if there's no fear in the marketplace, folks, you're never going to get a bounce. That's the bottom line. So we'll, if we go take a look at the XAU, the HUI, XAU out here right now is trading it down 184. And this also, I like how it's setting up also. You know, we did on Thursday and Friday, you got into higher price. You had volume behind the move. This is setting up, looks to me like a small ABC structure up that will get the XAU into the 54.74, which is the high that was generated out here on the 24th. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials down $1.60. You get the NASDAQ off 43. S&Ps are down 22. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome, folks. We get the Dow Industrials down 149, Nasdaq's off 40, S&Ps are down 22, and I'm going to walk you through, folks, okay? If you happen to be watching Target TV, you're going to see a chart up, and it actually has numbers on it. So we're over in South Korea right now looking at this market, and we're looking at Samsung. And the reason you can bring up any stock, it doesn't matter, but I wanted to show you something, how bottom line is that Samsung is trading right now at let's see, 108,000. No, 10,000. What is that? 1, 2, 3. 1,089. No, oh my God, 10,891. Okay. Bottom line is that as you're looking at this chart, what you're going to see is this. What happens in Asia, folks, is that the symbols are numbers. But what I want to show you, first I'm going to put this on a weekly basis so you can see how price and volume rule right across the world. This little baby on a weekly basis was showing, number one, that each and every time it was coming down, it's been in a consolidation, folks. The consolidation it's been in is since February of 2012. Bottom line, and what you'll see is that as they were moving the stock out, okay, first it was trading at 1.4 million, or let's say, 1.4 million won. Now it's at 1.1 million won. Bottom line is as it moves down, you have huge volume expand out of the marketplace. It gets to a higher high, the volume gets light beyond belief. Well, bottom line, and this is why I looked at a lot of different charts over the weekend, and you see this phenomena everywhere. It's just not in the U.S. What we did last week is that we broke those swing lows, and we broke them with volume. So Samsung got to 1.033 million won, has monster volume, and it broke down. It broke those levels, and what that sets up, is that sets up a run back to about 500,000, okay? So this on the weekly. We put this back. And now I'm going to show you, I'm going to put this on a monthly. On the monthly, what is screaming out is it wants to run to 875,000 won. The highs for 2.5 years had basically all distribution out there. First leg that it can get some support is at 875. Now, if you don't get support at the 875, guess what, man? This thing is screaming that it's going to go also to the highs of the lows of 2008. Now, those highs of the lows ends up being 560. So, we'll see where this whole thing does shake and bake. But in that context, there's plenty of other indices that are screaming that they also want lower price. And, of course, we're in a one-world deal out here. If we go to the FTSE, what you're going to see, the FTSE is up today. We're up 55 bucks. You're trading right now at a price point of 62.47, and we'll see whether that baby can hold. I don't get the volumes to the FTSE and the DAX until actually they're closed. The DAX is trading down. That's down 98 points right now. What that did last week, however, is that it went into its swing with dramatically lighter volume. The DAX had done 108 million shares versus the downdraft of 157. It has that high volume swing low that's hanging out there at 294. So the way that also is set up, that also is saying that, okay, we're going to get a test of those levels. The real key is going to be you're going to break down at those levels. Let's go take a look at United Technologies. Now, this little baby has been having conniptions. United Technologies come off its high. Now, the high in United Technologies is $1.24. That was generated February of 2015. As it came down, United has gapped away twice thus far. As that came down, that just took apart its swing point. And when we put this back, put this on a 10-year, what you're going to see, number one, is that what did it go after? It went after, well, it took apart the October 2014 level. The low of October 2014 is 97.30. The volume there on the monthly basis was 124 million. Well, guess what? We did 133 million. What we're going to do here is 118. So we got, let me just see what this does per day. So it's 5 million. So we're going to do 123 million again, approximately. Now, what does that set up? Well, what that sets up is that now we are going after the 83 level. The 83 level on United Technologies is the high of the August of 2011 low. That's how this is set up. Now, that, I suspect, that's what you're going to start hearing from me probably in the next 3 or 4 weeks, because there's been a lot of equities that have taken apart the October 2014 level, and the next level is the August of 2011 level, and we're in 2015. What a trip. You stay right there, folks. We'll come right back. Dow's down 115, Nasdaq's down 27, S&P's are down 17. We're going to break back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow Industrials down 119, Nasdaq's off 29, S&Ps are down 17.5. And if we come over first, let's go look at the E-minis. We take a look at these because you get a little bounce going here. So the correlation inside this goes like this, okay? We're at 1972.25. What you have just done is that we did, let's see, what time? We got 11. Okay, so you're going into the downdraft of 70,000 contracts. The high there is 1973. So you come down with 70,000. We just popped higher with 35. What does that set up? Guess what? That sets up. It's not going to make it. We'll see whether it closes. What it would have to do is this. It'd have to close over the 1974 at 1040, and right now you're at 1035. I expect what you're going to see is that you're going to see, well, we'll find out. That's how this sets up. But this, if you're basically trading swing points back and forth, this is a nice place to basically sell away. Why? Because you have a little swing at the low. We'll go back to the low. And as I started off the program, what we're talking about is that what this is building cause for right now is that this is building cause to get into the 1944 that was generated out here on the, was it 1940? Let me get the exact one. It's 1940. Yes, no, okay, it's 1949.25. That was generated on the 27th, on that Thursday before that baby snapped back. That's what that is generating. We go over to the NQs. We take a look at the NQs. You're going to see the same type of setup in the NQs. You're at 42.98 right now. We bring this baby back. Same type of setup. What you're going to see inside the NQs is that, I'll put it on a 1 for a second. You're going to see that we came down on the 11,000 contracts 10 minutes ago. What you did is that we did 5,900 contracts, and thus far on this little bar right here, we've done 3,800 rather. Yeah, so what you're going to need is that you're going to need 11,000, and we'll see where that shakes out. But this is the place that you want to basically, place your trades, and you put the stops right on the other side of it. We go over to the, now here, we'll do the correlation inside just the SPY, so you can see those correlations also. Inside the SPY, right now you're at 198.24. That, I'll put it on a 2 day so you can see it a little bit better. So inside that correlation, what you're going to see is that you came down with 5.5 million. Last bar was 2.3, and right now we're at 1.6. Inside the Qs, the NDX 100, what is that correlation? The way that correlation is set up, that correlation, you're looking for the strength versus the weakness, folks. That correlation, you come down on 1.2 million. Last bar was 920,000. This one is at 618 right now, and you got all of 3 minutes left. So volatility, yeah, volatility is going to continue. You can expect the volatility to continue in spades also in this marketplace. We go take a look at Rangol Resources. Rangol Resources right now trading at a price point of $59.98. Now, what Rangol's done, which is really cool, folks, is this. Rangol has rejected lower price this morning, has lighter volume. Rangol is basically building cause to get back up into the $65 to $68 area. That was the highs that were generated out here on August 31st. August 21st. That's the way that's said. Now, what it's also done is this, which is pretty cool. It has gone sideways, for basically since August 10th. You had a wide price spread, accelerated volume, you go up. You pull back. First day of the pullback was pretty intense. There's no doubt about it, because we had made a high with 1.4 million. You backed down the first day with 1.4. You didn't get to a swing point. Second day had 1.3. Third day had 1.1. That was cool because 1.1 was going against 1.3 and 1.4. Then what do? Bottom line, you back down today with dramatically lighter volume. Thus far, it's rejected lower price, has lighter volume. What does that set up? That sets up a run into higher price once again. So, this little baby is setting up correctly, and it looks to me like it's setting up for higher price inside this marketplace. Thus far, volume-wise, this is what we've done out here volume-wise. NYSE, you're at 181 million, and we take a look at the NASDAQ. NASDAQ right now, NASDAQ is at 367 million. So in both cases, the indices themselves are going to need higher volume, and thus far, that is not higher volume. The SPY has done 36 million. That correlation is 40 times. That's a lot higher volume. That is a lot higher volume. Inside the Qs, what do we have inside the Qs? The Qs thus far have done 9.4 million. You're dealing with 50. So let's see, you got an hour, 6 9s of 54. That's going to be close. The Qs are actually going to be close. SPYs, however, do have higher volume as you're getting into lower price. Some of the Dow stocks out here. Once again, you got the. Let's go over to the oil market. So, oil. There she is. Oil had taken off topside last week. Had the juice behind the move. CLV5. So let's see how she's backing down. Oil right now. We've done 176,000 contracts. That's a good back down. That's light volume, man. That's light volume. So we go over to ExxonMobil, see how that baby is setting up. Chevron setting up. If we take a look at ExxonMobil, she's also backing down with light volume. I suspect that ExxonMobil will get to their highs of the low bars. And if you're looking to get into those, I would wait until you get down to those levels. But that's the way that baby is setting up right now. So on Exxon's case, that would be a 71.44. We go Chevron. We take a look at Chevron. CPX. Okay, with Chevron, you're at 78.94. That level would be 75.38. The cool thing, and this is the thing about waiting, folks, is that because they've been in downdrafts for so long, what you'd want is that you want proof, or you want a higher probability that the selling is done in them. That's what you're looking for after these long downdrafts inside that energy market. That's how that whole baby is set up. If we go over to Oxy, we take a look at Oxy. What you do have with Oxy, it's a pretty nice setup, actually. What Oxy has done is this. This has had a couple different signs of strength. The first sign of strength has failed. First sign of strength was down August 12th. You go topside, you have juice going topside, you get into $74. Then it basically comes back, breaks its low. Now you get a second sign of strength. Where the protection comes, not necessarily the protection, but where you could put your stop is you're putting your stop under the 68, 65 area. I'd still let it come back into that area. Got to 69.57 today, rejected that level. But that's a nice downdraft that took place, number one. The high of that low on the 24th, that was a disaster day in the marketplace, has 10 million shares. So at that particular level, that's a nice level to basically put you back against the wall, and you're looking, saying, okay, I want that bounce, and I'm looking for basically a larger consolidation. Because what the oil stocks love to do is that they love consolidating, folks. That's how they like setting up. If we take a look at the XLE in general, what we have with the XLE is this. XLE right now at 65.23, and you know so check this out. The XLE, what the XLE is doing, the XLE is saying that we will back down. This is why. The XLE, we did 7, 6, no, not necessarily. Okay, the XLE might have the volume. Right now, it's flat. It's basically an inside day. It's down 54 cents, but really that's an inside day. The XLE, the buy on the XLE is like 62.58. You're at 65.24 right now. The XLF, we take a look at the financials. XLF out here, don't even think about touching those, man. Berkshire, let's go to BRK. We'll go to Berkshire Hathaway. Berkshire right now, she's at 134 off that high of 148. High volume swing low. We put this back 3 years. We take a look at it. So it got into, let me see if it got into the October level yet. So your October, oh yeah, I took that out. So Berkshire itself, now this is a heads up, Berkshire itself had taken out the October 2014 level. That's 132.03. 101 million shares, and thus far we've done 95 million. So it won't do larger volume, I don't think, because let me see what it does per day. Oh, it's going to be close. 5 million. This is on the monthly basis. $101 million. This is going to be right at it. So what you're going to have, Berkshire Hathaway has come into the October 2014 level. You're coming in with the exact same amount of volume. So what does that dictate? When you come in with the exact same amount of volume, folks, what it will dictate is that you're going to go at least test that low price point. Don't forget, folks, at TFNN, 10 hours of live programming every trading day. You can get it right on your cell phone. TFNN.MOBI. If you happen to be listening in your car right now, just remember it's TFNN.MOBI. That gets you all the audio. If you'd like to get the video with the audio, just go right on your cell phone, go to TFNN.com. On the right-hand side, you'll see a little box. You can hit that box, and the bottom line is that our servers will understand what type of device you're listening on, and then you'll get not only the audio, you get the video. And if you happen to be on Facebook, you can go to TFNN.com on Facebook, and each and every program is now on Facebook, as well as the update that I do in the morning. Our phone number is 877-927-6648. Let's go back over and take a look at those future markets. And right now, the Qs are at 03. And they just tested the highs. Now, what they're going to be laid out for in the next 5-10 minutes, they're going to go after this swing low once again. The E-minis, we take a look at the E-minis. I'm telling you, man. Okay, we're at 1973. This little baby set up the exact same way, you know. So the correlations out here, the swings are set up out here, and they're set up pretty good. Let's see, we're at 46. Last bar out here failed. Well, it didn't fail on price. The bar that we're at right now is failing on price. The last bar had 40,000 contracts, but you were going against 61,000 in E-minis. And the NQs, what we had out here is that she was coming into the I'll put it up one day so I can see this thing. Okay, so that was coming into 11,000 contracts. You did 6,000. Yeah, and not enough juice. That's how this whole baby is set up at this particular point. We go take a look at Caterpillar. We take a look at a few of these larger equipment makers. What we have with Caterpillar right now, off its high of that 111. You're at 75. Now, what Caterpillar basically broke a B point. It didn't have the juice on the weekly. On the monthly, though, and this is a real problem, it looks like it's going to have the juice. We did 152 million. Yeah. Versus what? No, it's not going to happen on the monthly either. So that's good. That's good for Caterpillar. There's no doubt. What Caterpillar is trying to do is that you have the high volume swing low at the 67, and that's what Caterpillar is going after. Caterpillar is going after. Oh, see that? This is where what I had brought up last time, folks. Last segment is that what has happened is this: the October 2014 level that I was looking to get tested, that's got tested. Your next level is the August and the October 2011 level. And that is what Caterpillar is going after right now. And that also is what a lot of other equities, I suspect, are going to go after. And a few of them are actually going after it right now. If we go take a look at CSX, the trains, that's at 2750 right now. These things are one of the first ones that did come off its high, broke everything. CSX has gone from a price point of 37 to 27. Monster volume. We take a look at this and we put this on a weekly basis. And what you have on the weekly basis, monthly basis is this, is that your first support area out here is at $22. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are down 105. You get the NASDAQ off 22. S&Ps are down to 16. We're going to bring it back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Now down to 102, you get the Nasdaq off 21. S&Ps are down 16. We have the gold contract down 350 at 1130. Gold looks like it's already basically rejecting lower price. Silver right now is down 7 cents at 14.44. We have the bond market. You get the 10-year up 7 ticks. The 30-year is up 15 ticks. And don't forget, folks, coming up right after me, we got our man, Mr. Basil Chapman, going to be growling a problem with us. Our man, Mr. Steve Rhodes. You got Daryl Mott. No, not Daryl today. Dave White, and I will be back this afternoon. Thus far, what you have out here is that we have a market. If we take a look at the SPYs, it looks like the SPYs are going to have a higher volume. We've done 41 million thus far. On Friday, we did 160 million. So the way that is set up, that is setting up lower price, higher volume. What does that set up? That sets up, number one, a test of the Thursday lows. And that test of this is what's kind of cool. The test, folks, inside the if you're looking at the SPYs, the diamonds, it doesn't matter what you're looking at. That test of the Thursday lows is going to give a huge amount of information out to us. Can it test it with higher volume or lighter volume? You know, and that is, well, it'll tell you that, okay, are we going lower? Or, in fact, is the test going to be complete? And then bottom line is that the bulls could make a case that, hey, guess what? We're going to try to get higher. The bears would make a case as it pushes into that with good volume that you're going to go lower. The larger case, I suspect, well, in the larger case period, is that now what you have is that you have a high volume low. The 24th, that baby is going to get tested. That's the SPYs. If we go take a look at the Qs, same type of setup as inside the Qs. What you have with the Qs, you're at 105.11. That, if I take, well, let's take a look at the NQs first, because inside of the NQs, what you have here is that level. Let me put this, we actually got to put it back 3 days. Oh. So we're at 43.01. That we've hit 42.70 today. That level down there, though, is 42.26. So how we come into that level is also going to basically set up, because see, if you get that level, what you're going to get pretty quickly, there's not much. Well, there's actually at 42. See, at 42.26, this is pretty cool actually. What stopped that the last time down was actually the highs of the 26th. That's what stopped that. So when we came down so fast and furious last Thursday, you got down to is it 42.26? Yeah, you did. Okay, so check this out. This is cool, man. So you get down to 42.26. What it stopped at in its tracks was the spike higher at 10 minutes of 4 on the 26th. So, because we went up there with 28,000 contracts. And when we came back down, what you did is that you came back down and we got into that level with 26,000 contracts. So the way that little baby is set is that is saying, bottom line is that number one, will get tested. Number two, each and every time that you're down at that level, if it gets tested with lighter volume, guess what? It wants to go higher. You get tested with heavier volume. What was it set up? It sets up lower price. The indices themselves, this is what we have with the indices. You have the NYSE right now at 212 million, and that is light volume, by the way, okay? NASDAQ, what we're dealing with NASDAQ, you're dealing with 438 million. That is heavier volume, because the way the NASDAQ is set up is that you're already down, you're pulling back, and you're pulling back with heavier volume. Thanks for being here, folks. You have a great day, safe day. You stay right there. Man, Mr. Basil Chapman's going to be coming up, growling and prowling with you. Then Steve Rhodes. Dow right now is down 105. NASDAQ's off 24. S&P's down 17. Have a great one. Have a safe one. Basil's coming right up, folks. Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.